So some people are saying, look, you've got tariffs. We're going to hear some pre-announcements from companies, and President Trump is shooting that down. That's speculation that, in fact, you know, this is tied to the China story, the trade dispute that sparked the sell-off. Here's what he told Shannon Bream last night.
The Dow today, a lot of folks very concerned about what they saw. I know that you've had some theories on that. Some of your critics say that it's in part because of the trade war with China.
No,
what do you make of it?
No, I don't think it's that at all. I mean, the trade war with China, we're taking in billions of dollars in tariffs from China, from Chinese goods, and it hasn't hurt us at all. We're taking in billions and billions of dollars. We're going to make product here that we're now buying in China. No, that wasn't it. The problem that I have is with the Fed. The Fed is going wild. I mean, I don't know what their problem is, but they're raising interest rates, and it's ridiculous because we're winning. I don't call them trade wars. I say we're doing, we're doing a little bit of battle, not much. But China, we put $250 billion worth of tariffs and potential tariffs at 25%, and we have $267 billion more if I want to do it. But they want to make a deal.
Joining us right now to talk more about that is Dennis Gartman. He is the Gartman letter editor and publisher. Dennis, good to see you. Thanks very much for joining us this morning. What's your take on the market performance yesterday?
It was rather relatively ugly, wasn't it? And I'm afraid it's likely to get a good deal uglier before it gets any better. If you want to talk about technicals, there's really no support for the S&P till 2,700 at best. And let us hope that 2,700 holds. I have my doubts that it shall. I think the president last night was making untoward and ill-advised comments, taking on the Fed and talking about more and increased tariffs and trade protection. Those are the two things you do not need. A very, very bad decision. I'm a right-winger and a free market-oriented trader, but this is not what I would call a conservative president's economic policies that would do well for the economy.
And in fact, he did double down on his criticism of Fed Chairman Jay Powell. Yeah. Listen to this.
I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy. So you could say that, well, that's a lot of safety, actually, and it is a lot of safety, and it gives you a lot of margin. But I think the Fed has gone crazy. I really disagree with what the Fed is doing.
You know, I was skeptical of the Federal Reserve raising a fourth time in December. I just was skeptical of it. I'm still skeptical of it. I don't know that they should or they will in December, although I know that that's in the, expectations for Wall Street. But if they don't, people start speculating whether or not it's the pressure from the president. So you really don't want to hear the president talk down the Fed. What do you think?
Yeah, I guess it could be interpreted that way. Although, I think it's fine to criticize the Fed. I think one thing that's nice about our new Fed chairman, Jay Powell, is he criticizes the Fed, too. He's got some humility. Okay. He's saying, we don't always have the answer. Our models don't always work. I think that's a healthy change here. But you raise a good point. Are people going to think it's just a political move if they don't raise?
Doesn't it make Powell sound like he doesn't know how the market works, or maybe even the economy? And that makes the market nervous. I don't know, Dennis, what you feel about Trump's criticism of the Fed chair.
He said he didn't like it. He said, yeah.
Well, I will say if there's one person that you shouldn't be criticizing, it is Jay Powell. He is probably the most stable, decent, good Fed chairman in quite some period of time. The last thing he's going to do is something crazy, and to call the Fed chairman crazy and the Fed's activities crazy is truly ill-advised. We deserve as Americans a better response from our president than that sort of stuff.
Dennis, I want to get deeper into the weeds with you at Stega McDowell. So something that investors have been talking about is the higher term premium on Treasuries. That's the extra yield offered above where interest rates are expected to be. But it's the premium for locking up money for a 10-year period. If we get back to where we were 3 years ago when the Fed started raising interest rates, the 10-year yield would be at 3.75%. A return to a term premium that would count as normal would take that 10-year yield up to 4%. A lot of this, we had a negative term premium because of all the shenanigans by the Federal Reserve, and that's something that's really concerning investors.
Well, the Fed had no choice but to become extremely expansionary in 2007, 8, 9, and 10. No question about it. And I've been on the show before and said that I think by the end of 2019, we'll have the 10-year at close to a 4% yield. You have to remember, I've been in the business since 1972, and I can remember the 10-year trading at a 12%, no, excuse me, at a 16% yield. So the fact that it can go to 4% does not surprise me even slightly. We will probably get there by 2019.
What about some of these other technical factors? For example, the sell-off took place on above-average volume. 3 hours into the session yesterday, the volume was 20% above the 1-month average. What about the fact that the fear factor, the VIX, the volatility index, was also quite high, jumping 20% to the highest since June? Your thoughts on some of those technical factors and what it tells us?
A lot of the internals in the stock market had been deteriorating relatively badly in the weeks prior to yesterday. You had volume coming in on the downside rather than volume coming in on the upside, which is always something to be suspicious about. You've had a far greater number of stocks declining than rising, even as the Dow Industrials were making new highs. That's always something to be concerned about. And as an old guard trader, I was always worried about the fact that a term that we used to refer to as painting the tape, where the Dow would be up, but the broader markets, the broader indices were always trading lower. That's something to be concerned about. So things were turning ill long before yesterday, and I think that they're likely to continue to be ill. I don't like to be a Debbie Downer, but I'm a little concerned here. Well,
I want to raise the issue. One of the problems that the president could get into with when you start trying to rationalize why the market is falling. It's like the Fed, they're loco, they've gone crazy. Yeah. It's not my trade policy. That's why Ronald Reagan would say stocks go up, stocks go down. You stick with talking about your economic policy coming out of the White House, and you don't talk about anything else. Because again, to investors and to voters, you sound like you're protesting too much.
Yeah, and you're right. Stocks go up and stocks go down, by the way.
Right.
You know, we've had a fantastic market performance. Stocks go down sometimes as well.
All you got to say is that we have put in these incredible policies, deregulation and tax reform, and so we've set the foundation for continued economic growth. You don't need to talk about anything else.
Right, but he's a real estate executive before he was president, and he gets into the weeds on things. And one of the reasons his base loves him is because he says whatever he wants, and he feels that he's honest with people. Dennis, before you go, you said you were worried. What is it going to take for you to get back in the water and start buying this market?
It's going to take probably further weakness to at least put 2,700 to test on the S&P. It's going to take 1 or 2 days of very substantive 10-to-1 downside volume. And then finally watching the commodity markets turn for the better. That will get me interested again. But I think before I do, we're going to have to see the S&P trade to 2,700 and hold there. Let us hope that it does.
You want to see things like iron ore, oil trade up in the commodities area?
Yes.
Okay.
Dennis, and in fact, commodities have been doing demonstrably better than have stocks for the past year, and nobody's paying attention to that fact.
Well, we will watch it. Dennis, good to see you. Thanks so much for weighing in this morning.
Thanks, Maria. Good.